Hey guys, Doug the Retirement Guy here. Hey, I first want to thank everyone who's supporting us on Patreon. Uh, for all the people who've become members, really appreciate that. I can't believe how many we've jumped up already. Um, if you haven't seen, hey, check the description below. You'll see a link to our Patreon. Anything helps the channel to keep giving you this vital information uh, to help you grow your fund. Just keeps the channel rolling fine. Let's get into today's video. Should I invest into Defiance S&P 500 Income Target ETF? We've looked at a lot of different S&P 500 ETF funds. Most of them are selling call options. None of them really produce what we are expecting or what we're hoping for. But I seen something different in Defiance that I thought, definitely something to look into. Their dividend yield is 20.06. So I was impressed with that. So let's take a look at this. The Defiance S&P 500, what they did, and really what got me rolling on this one is when I looked down into it, they said this thing is designed for upside growth potential, aim and target of an annual 20% uh, dividend payout. So they're putting it on the table, and when you look deeper into the fund, you find that they are actually willing to use some of their net value to keep the thing going at 20%. But they believe with using their option strategy, selling call options, um, and also simultaneously buying other call options at higher strike prices, that they can achieve this 20%. So it's a little bit different than what you see in a lot of different funds, like from Yield Max or Round Hill, that these guys are willing to buy other people's call options to try to sell to continue to make profit. Plus, they're willing to do everything they can to hit that 20% number. So it's quite impressive so far. Distribution is done monthly. Like they said, their distribution rate 20.06. Expense rate 0.87. Personally, I mean, if you go to the weeklies, most of them are 0.95. Expense ratio 0.87 on a monthly paying out. It's a little bit high, but better than most and not as good as others. And then the 30-day yield is 0.46. We look at the holdings of this fund, and you see pretty much they are pretty much buying all the iShares, IVV, that they're selling on their options. They have some cash on hand, which is common, but primarily they are buying hardcore options or stocks to sell as options. So why SPYT? Well, it's a strong 20% dividend, and if you could get that on a regular basis, man, this would be strong for everybody. Now, I always say that 20% is over a specific period of time and both includes income and interest payments or capital gains. But we don't see them investing much into treasury bonds or notes or anything like that to create interest payments. Their 0.46 is a true number of when their payouts are coming out monthly. So the money's there. Again, it's not going to be huge because you're looking at 20% over 12 months. But it's really this one here that got me interested, was aim to achieve a target annual income of 20% from using the S&P 500 using options payouts monthly. So these guys are trying to do everything they can to get you a 20% return. Monthly dividends, as I've always said, is good. It's our minimum for a retirement account because we like that regular cash flow so we can pay our bills. This fund came out in March of 2024, so it's about a year into it. So we got some history we can look at to see how well they've done over the past 12 months. When we look at the return of SPYT right off the bat, this is of March of 18. Excuse me, but that's March 18th of 2025. 1 month out, they're down 9.86%. 6 months, they're down 11.97. Year to date, they're down 7.96, and for 1 year, they're down 12.84. So it's not been a strong year for SPYT. So what we did is we went back and said, let's do this in our calculator. $10,000 investment into SPYT back in March of when the fund started up. The fund started off at $20.05. We were able to buy 498 shares. And then as it went, the dollar-wise value of the stock is held okay until March, which is common because we saw the same thing with the S&P 500. But unfortunately, with that drop, it came down to a negative 11.49% or $1,148 loss. Now their dividend picked up 16.07, which was shocking to me because when they're saying they're trying to get to that 20% number, they just missed it. And I saw that they missed a couple of dividend payments, which took them out of the money. So that one was real concerning to me. And so you give a total return of 4.58% because the 1607 minus the 1141 just adds up to 4.58. It just doesn't work. So price adjustment over time, and we put these two graphs together, and basically it just showed the SPYT really wasn't holding. And when you look at the one that throws me here is when you look at the red arrows, the top blue area is the SPYT's numbers charted over the past 12 months. But when you look at the green one down below, that's the actual S&P 500 and what it's done. So what I'm saying here is in the red, you don't see the S&P 500 making this big giant loop of increase. Now in the blues, you see where the SPYT has dropped off, and you can see that the S&P 500 has dropped off equally. You can almost match every one of the moves in the blue at the green mark, except for the red arrows. And that really bothers me and confuses me. Now you can see a little bit into that right after, basically in the January frame, that there's a slight little increase, but it's just not reacting the same in that one little hump. So it's got me concerned. The average price over the past 12 months is $19.48. The current price is $17.75. That means currently right now they're marking 8.64% below the 12-month average. Now I know a lot of people, a lot of companies all use the 200-day average, moving average. I personally always like the 12-month out for retirement to see what did this thing do for 12 straight months. And where's our positives or negatives? Right now, 8.64 below average. Again, I don't think it's a time to be involved into this one or to buy into this one until you can get this thing down probably about another 3 percentage points. So in summary, the stock return losing 12 or 11.49% over 12 months, definitely a thumbs down. The dividend return is 1607 over the past 12 months. I'll give it a thumbs up because 16% is a great number to have. But the total stock return of only 4.58 over 12 months, I had to put that a thumbs down. You could easily put your money into a Fidelity high interest earning account and get you about 4.4, 4.3%. I have other funds out there that we've dealt with. That are paying easily 10% total return. I got some at 12%. There's a lot of funds out there that can beat a 4.58% without much risk and challenge. So I'm not pleased at a 4.5% return. So is SPYT good for a retirement account? My answer has to be no. And the reason for that really comes into, even though a 16% dividend return is great, you're losing too much of your value to do anything with that. That's why we said you take the 16 minus that 11, you really only made 4.58%. And if you're using this to live off of 4%, it's a tough number to deal with when there's more exciting packages out there. And I can put down in the description, I can put a few links of ones that I would suggest take a look at. They'll definitely get you better than this. So unfortunately, we put this as a hold and say, hey, this is not going to be what you want.